Well, Scott Gecas is at the edge of the floor in Chicago there at the trading floor. And Scott, you've been watching this. We're slowly leaking this grain market lower and lower as we go on here. Is there anything behind this? What's leading the way to the downside?
Yeah, well, there's a lot of different factors that are going on left and right, as well as always for the last 18 months or so. The trade war talks, breakdown in trade war talks over the weekend. So the funds continue to sell beans, soybeans. As you can see, we've been down about 8 days straight. If we continue at this point, so this is going to be about the 9th day straight down. That trend is definitely broken. It's definitely to the downside. What's interesting, though, is that the calls are still holding skew. So what that means is the calls are a little bit more expensive than the puts, even though we have this big downtrend. So we're waiting for something positive to come out to reverse that trend, but it's going to take a lot to reverse that trend. So with everything that's going into place, cumulative sales are down pretty much across the board, well below the 5-10-year average, as well as certain of the other aspects of the grain trades. So it's going to take a positive trade war talk, something positive with this phase one deal to get done before we can see any type of upside momentum.
Well, okay, that momentum is, of course, to the lower side. Seems to be dragging wheat and corn with it. Corn really did a pretty outstanding job of trying to stay ahead of the game for quite a while.
Yeah, and that's very interesting because if you look at overall, most of the traders typically they're short beans, long corn. Over the last 18 months, that has reversed. Over the last few days, about a week and a half or so, that started going back to being short beans, long corn. And that's why you can see corn being a little bit more supportive rather than the just complete breakdown on the bean side.
Scott, is it customary for the fund managers to start pulling out of these commodities this time of year, going into the final little bit of the year, and wait and see what happens when we turn the calendar to a new year?
Yeah, that's what we expect is usually what happens, just not just in the grains, but pretty much across the board in every type of market. And that usually takes place around the second week of December, third week of December moving forward. So there should be some rebalancing going on. We just have to wait and see where that's going to come out and play. But again, that's why we're looking at the option flow. You can definitely get a bigger idea of where that protection is going to lie just based on the open interest increases, decreases, and just the volume for that day.
Okay, we'll be back in a moment. Scott, stay with us. We've got more coming up here on Rural Radio, Channel 147, Sirius XM, and on RFD TV. We'll be right back. Back to Scott Gecas. Scott, this February lean hog contract, it takes many more hits like this, and we'll be at a limit move for today. We haven't seen a lot of limit moves here over the past 2, 3, 4 weeks or so. But nonetheless, this shows just what kind of weakness there is. Is this all related to the same thing you were talking about earlier, about lack of positive headlines?
Yeah, exactly. The breakdown in trade war talks in the hog market is definitely going to be a key factor moving forward. So we're ramping up production. Production is at highs. There is a little bit of supply concerns, but the production is expected to drop off here in the first and second quarter. So we have to wait and see how that happens. But you also got to remember that Chinese hog herd, it dropped by over 40%, and that's just what they're releasing. So we expect that number to be a little bit more than 40%. When this all started, 10% was their benchmark. So if it hit 10%, that was a big problem. Now they're saying 40% or higher. So what I was reading today, which was really interesting, is if you take all of the world's pork and then export it to China, it's still not enough to recap what they have lost for 2019. So that's very interesting. You know, they continue to buy U.S. pork. I mean, exports are up almost 48% on just a year on year. So it's not necessarily a want, it's a need. They have to do it. It's just where are they going to get it from? And now that they open the doors to be able to import more pork from other countries, that's definitely a concern, and that's why you're seeing a little pressure on the hog market today.
Okay, I got 30 seconds left here. What's your thoughts on the crude oil market today?
The crude oil market, that's a soap opera in itself. So we had a breakdown on Friday with the trade war talks breakdown, as well as we had a build in U.S. inventories, about over 5 million build in barrels. So that had a little bit of pressure coming in today. We have a big ramp up because OPEC is rumored to cut production by 400,000 barrels. So we're going to have to wait and see where that comes out. But that's the story of oil today.
Scott, thanks a lot. Sure appreciate it. Scott Gecas there in Chicago at the edge of the trading floor. Crude oil still up 75 cents, but off of its highs from earlier today.
Interesting supply disruption.